Welcome to the StockMentor.com studios here in the Black Hills of South Dakota. I'm your stock mentor, Brian Johnson. And we had a run by the Bulls only to be met by a wall of bears. What was the wall? The wall was the 50 period moving average here on the 60-minute charts. We saw a lot of this. Run up, hit that wall, run right back down again. So Bulls still just not strong enough to find their footing in through here. More importantly, though, we are holding on to some of these levels. We did close at just below really the 9,900 level, which we've been talking about for a while. But on the 60-minute chart, more important to kind of hold this 9850-ish level down in here, and we did do that today. But boy, they just took a wallop this afternoon. Tried to get the markets to think bullish, but bigger money had other ideas. So you can see here that nothing's really changed. The bears are still holding tight to their position, and they do not want to let go, at least not yet. If we look at it on a daily, at one point during the day, took a look at the daily chart, things were looking pretty good for the bulls. In the short term, I'm thinking maybe a run back here to the 20. But by the end of the day, you can see how quickly that candle image changed. It went from a big white candle to a small red candle by the end of the day. Did not take the bears long to slap the hooves of the bulls and bring it back down. So now what do we have working here? Well, ultimately, if things keep up in this kind of sideways consolidation manner, we have another low base forming, similar to what we saw here. Now, will it last 11 days? Probably not. We'll see it break one way or the other. I would actually assume by the end of the week. And that may be to the downside. So we are still watching closely for these lower levels of 9,800 to be broken for the bear rush to continue. For your upwards momentum, you can day trade if you'd like to the upside, but you're really watching these 10-200 levels up here. NASDAQ on a 60-minute kind of doing the same thing. Now, it did not make the 50. What is that telling me? Telling me the NASDAQ's been weak lately. It really has been. The NASDAQ has not been doing well lately. And I don't think that there's much relief in sight for it, quite honestly. This still kind of looks like maybe a 3 down with a 4 and then a 5 to the downside. Yet just looking for breaks below 1770, I think, still give you opportunities to short the NASDAQ. Here it is on a daily, and now that we have broken that 200, you can see what held today. Yeah, the 200. This is why it's so important to have these levels marked in your charts, know where they're at. Even if you're intraday trading, it's still good knowledge to have, and you can see this is exactly where it turned around at. The 200 is at 1822.50 with a high of 1823.21, so it really hit the 200, turned around and ran the other direction. Where is the target? Well, we get below that 1770 area. There's some other light areas here, but ultimately it's right back down here to probably this, let's call it 1735-ish area. Yeah, so there's some good opportunities to short this NASDAQ. And stocks within the NASDAQ are they're taking it hard. Apple just got clobbered today again. So looking at it on a weekly, we are getting closer, but look how we're holding the 50-week moving average. This is why it's really in a cautious position right here. Breaks below that 1770 do put us firmly below the 50-week moving average and could take us towards that 1730, 1735 area I was just telling you about. All coincides with what we're seeing here, and the NASDAQ would then catch up to where the other indices are at or already have been. SPX on a 60-minute doing the same thing too. Notice that 50? Perfect touch of the 50 after the move up today. So, perfect touch of the 50 met by a wall of bears. Not an actual wall of bear, whatever that would be, but a wall of bears. And the selling came in hard then towards the afternoon as we watched big red candles to the downside, meeting these big white candles that we had to the upside. But this overhead resistance just holding very well for the bears. Things playing out very nicely. Watching these lower levels, 1045. I had a student today, we talked for a while, and he had taken a trade down below this 1045 level and did not work out for him. I was wondering if there was anything he could have done differently, and the truth is no. It was a great trade. It was a fantastic trade. It just didn't go his way. Listen, we play an odds and probabilities game, people. Not everything's going to go your way. And that was the situation there. So, was a trade that was a great trade. I'd take it 10 out of 10 times. It just didn't work out. Sometimes that's the way it goes, but it was a good trade anyway. Leading us up to say that another break of this 1045 level, I think I might be trying again. I'll keep my risk low, put a 5-6 point stop on it or whatever and just see if it runs. But man, I like that trade. I think it's a good entry. SPX on a daily. Big candle up, only to be met by the selling this afternoon and making it, at the end of the day, the same type of candle we saw on the Dow. And that is maybe setting us up for another low basing formation, which is ultimately bearish. Anything back below this 1050, 1045-ish area could take us down into the 1030 area before we see more support. Weekly also coming back to this lower line that we've been watching here, starting to get a little stretched now on the weekly. But as long as these lower levels continue to fall, you just got to remain neutral to bearish and continue with the bear sentiment. Here we have the VIX on a daily. It was up, but only slightly. Once again, this is what you want to see if you're bearish. The markets go down and the VIX continues up, but it doesn't continue up at any great lengths. This is good for options traders, giving us plenty of room up above to see the VIX rise and make a little bit of volatility on our options. And at the same time, giving the markets room to run to the downside without any major spikes in the VIX. Apple on a 60, look at it here, just continue to fall apart. Broke this 200, broke this blue line, came back, retested them, held, and now continues to bleed its way to the downside. I think I can move this in ever so slightly, actually. I think I'm going to go to just a 1 month instead of a 1 month 15-day chart. That gives us a little bit. Let's go ahead and save those changes. I like that better. Okay, so 242.50. Was kind of the low, I think, of the day, and I have that marked as a support resistance level in my daily chart, which we'll see next. But you can see it continuing to fall apart. 247.50 was my mark for the longest time, still is, continues to be, and once we broke that line today, it was off to the races. So a very good day to intraday trade Apple to the downside. Even as strong as it is, still some good trading to the short side to be done on Apple. Still cautious holding it overnight just because Apple is a strong stock and any good news that comes out will affect Apple in a positive way in most cases. Here's that 242.50 line that I had drawn in. This goes way back as support and it's holding here nicely. Now, this did not get quite the punch. As long as it held this blue line, we were in okay shape for Apple, but it broke the 20, then it broke the 50. Now it's just plain old breaking. Starting to really break down, and it's very apparent on, yes, the weekly. So, looking here, you can see us starting to fall below this big blue line. It tried and tried and tried, but now the water's starting to engulf it and starting to get up and over it. So, watch Apple closely and be very careful if you're long. I would not think that a test of this 20-week moving average is out of the question. Maybe not this week, but maybe within the next few weeks. FAS on a 60-minute was down only 43 cents today. Once again, just showing us why we want to continue to intraday trade this. Consolidating down in this area. This blue line I have drawn in held nicely today. And the bears took over from there, bringing it right back down to lower support. It does not want to shake this lower support, but breaks below it. Even though we've had one break, basically two breaks down here, another break of it could still give you a great short entry for FAS. FAZ popping back up as well today. Could this be a 1, 2, 3, 4 with a 5 yet to come? Could be. Certainly looks like that could very well be plausible here. Just got to be careful here with how you're playing these markets, especially these 3-time ETFs. They're really meant to be intraday traded, and they're still meant to be intraday traded based on the daily. If you get a break, you're looking for something above the 18, 20 area. before you take this to the long side on a more maybe buy and hold. You may be able to do that if we get a break above about that $18.20 mark. Otherwise, breaks down below 15.25 are your short entries. That'll do it for today's video. Okay, we see it, and we see it over and again. The Bulls for a while were just handing it to the Bears every single day, and now the Bears are getting their revenge. They're coming back, and they're just beating up on the Bulls. The Bulls need some work. They got to get up over 10-100. They got to get up over some of those more major levels before you can call this a bounce. And as it is right now, remain neutral to bearish on the markets. Look at these more major levels to be broke, and then play them accordingly. Capital preservation, guys. All right, see you again tomorrow. Have a good one. Bye.